Thank you for viewing the latest Orion Private Wealth Management newsletter. Since the last video update, there have been two significant events that have occurred. Firstly, the vote by Britain to leave the EU, also referred to as Brexit, and secondly, the federal election in Australia. First of all, with Brexit, it was a surprising result. Many were expecting it to be a tight result, but one which saw Britain remain in the EU. Since the reality of leaving the EU has started to sink in, we've seen considerable protest and efforts made to have the referendum held again, or alternatively looking at ways in which it can be blocked. I don't see that will eventuate. I expect that things now are well and truly in motion to have the EU, Britain removed from the EU. Exactly what form that will take and the timeline for that is yet to be confirmed, but with very complex trade and security arrangements to be renegotiated, it is likely that this will be a project that will take 1 to 2 years before it's fully implemented. We did see an initial sell-off on the market as a consequence of Brexit. However, in the last week, there's been a rally, and while that is reassuring, unfortunately I expect we'll see more of a seesawing effect as announcements are made and volatility to continue. Unfortunately, global growth has been reduced since Brexit, and there is likely to be a lack of confidence in the flow-on effects as a result of the Brexit result. Interestingly, there is now $16 trillion Australian dollars that are in bonds with negative yields. That's definitely indicating the efforts that are being made to stimulate the economy, but is also putting pressure on the profitability of banks. And it's possible, should this trend continue, that there will be some other consequences down the track that we'll need to keep an eye on. Turning our attention now to the Australian election, it was a very long campaign and unfortunately has delivered what I think to be the worst outcome, which is a lack of a result. I highlighted this risk in my earlier videos, and unfortunately it's what's played out. The Prime Minister has announced this morning that the result may not be known for another 2 weeks as counting continues and negotiations occur between both major parties and crossbenchers. This, in effect, amounts to about 3 months, nearly 3 months, that we've been without a government. That being the 55-day election campaign, which was the longest we've seen since the 1960s, and also the 2-week period that the Prime Minister has highlighted as the likely period before a result is known. There is, of course, a possibility that neither the Labor Party nor the Liberal Party will be able to secure sufficient crossbench support to obtain the required number of seats, 76, and that we could potentially be back at the polls in the very near future. Unfortunately, the result has a couple of ramifications for clients and portfolios. Firstly is that it delivers a lack of confidence, which is perfectly understandable. While there is uncertainty, we don't have direction and leadership, and it's difficult for businesses to plan around that, and that will have a dampening effect on confidence, certainly in the short term. Unfortunately, because of the makeup of the Parliament that is likely to exist, that reduced confidence is likely to continue for some time. Secondly, as I also forecast in earlier video updates, as a consequence of the election result, certainly there's tremendous uncertainty as to what policies will ultimately be legislated. In particular, for clients will be elements that have been proposed by the Liberal Party, such as the changes to superannuation, and also for the Labor Party, their proposals to change superannuation and also for negative gearing. Ultimately, it will be dependent upon what the government that is formed is able to negotiate with the crossbenchers as to policy that will be presented to Parliament. The advice that I have for clients at the moment is not to adjust their portfolios and to wait and see what is ultimately legislated and becomes law. If you do have a change in your attitude to risk, that is certainly a reason to make contact with us, and we can identify whether there should be changes to your portfolio as a consequence of that. However, if you are within the benchmarks of your risk profile and your attitude to risk has not changed, then my advice is not to take any action at this point in time. And of course, we'll be undertaking what I anticipate to be quite comprehensive reviews again when legislation has passed and we know what we're dealing with. I look forward to giving you another update in a fortnight. At that time, I would have just come back from a conference overseas where I'll be getting the most up-to-date information on markets and investment products. Thanks very much.